Howdy folks, welcome to the Daily Coin. My name is Rory and today is Wednesday, May the 16th, 2018, and I have the very distinct honor and great pleasure of welcoming back to the show a gentleman who I hold in high esteem and have the utmost respect for. He is the president and founder of Future Money Trends. You can find out everything that he's got going on over at futuremoneytrends.com. Speaking, of course, of Daniel Ameduri. Daniel is a self-made millionaire and full-time fact finder. And it's a quote from Daniel: "I credit my success to a strong desire to research economics and surrounding myself with the right people," end quote. Daniel, welcome back to the Daily Coin.
Well, thanks for having me back on. I certainly look up to you and love your show, and it was such a pleasure to meet you a few years ago in Louisiana.
Yes, it was. That was great fun. And as you say on the homepage of Future Money Trends, life's not cheap, especially if you want to do it right. And in order to do that, you got to stick around. And how did you arrive at that? Life's not cheap, especially if you want to do it right.
Well, I had kids.
Oh.
I had kids. So, I had kids, and we would go on these Disney cruises, and I found out there was this whole secret side to Disney with the Disney Concierge. And all of a sudden, I'm like, wait a minute, I've been missing out. There's like this whole other service where you don't have to wait in lines, or you go to the park in Orlando, and they have a VIP guide where you don't have to wait in line. And, it's like a 3-hour line for Space Mountain and some of these rides. So, but, when I say life's not cheap, it's true.
It's true.
A lot of the quality experiences you might want to have with your family, or that peace of mind, that comes with being financially independent, where you have no debt obligations, and or your debt obligations are taken care of by a tenant, for example. But look, we can't. I love the minimalist movement, but at the same point in time, I also want to be a maximalist in the sense of life and adventure, and some of these things cost a lot of money, and it just is what it is. So that's really my goal with Future Money Trends. Is, look, I went from nearly being bankrupt to being a millionaire in roughly less than 5-6 years. And, here we are today. It's 2018. And I feel like my passion and my life's purpose is to really channel all that energy into helping other people do the same thing. And it's ridiculous that I even get to do this in life because, I didn't go to college, never wanted to. I hated school. But I didn't have any kind of special training or something to do what I do. It was just a hobby. I had always been into business and stocks and investing. I bought my first house when I was 18 years old. Bought my first business actually at 16. I really talk about my first. I purchased a gym, a partial ownership in it, and I just was always interested in stuff. And so now what I'm doing, it's kind of selfish when you think about it, because I'm just lurking around the internet all day in the financial section, and I'm looking for ideas to make money, looking for ideas to have income. And then as soon as I find it, instead of just acting on it, I get to not only act on it, but I get to share it with a few 100,000 people who are subscribed to the letter now. So I think it's great. I get to spend 8 hours a day just looking for, we call it fact finding, about ways to make money, and then I get to share it with other people.
That's really awesome, and I love that story, Daniel. That's why I respect you, because that's just a great story, and the way that you really made your millions is during the 2008 financial meltdown. You bet against what was happening. You saw the problems that were out there, which we're kind of seeing a rhyme here. Correct me if I'm wrong, but it's 2018 is looking a whole lot like 2006, 2007. Or am I wrong? I mean, but that's when you made all of your money, when you looked at what was happening, and you said, "Wait a minute, something is out of balance here." And are we seeing that same thing right now?
The timing is so difficult, but let me just take everybody to something they can fully understand and appreciate. Think about the mindset around the election. Everybody in the media, there was a big story out there that Trump would be the president and the economy would implode and the
Yes.
stock market would implode and everything would just be a disaster. And that's what everybody thought until he won. And then the trade completely flipped. The stock market went from 17,000 to 25,000, at least the Dow Jones. The economy feels great. Every consumer optimism, business optimism, they're all at records. Unemployment, I mean, it's across the board. It's a complete flip. Now, fast forward to where we are today, everybody's feeling pretty good. Expectations are for this to continue. And what happens time and time in markets is it's constant. The market feel, the market mood is constantly doing the opposite of what we all expect. So I would kind of use that as an indicator right now that everybody feels like, hey, you know what? Interest rates are going up to 4%, but we can absorb that. Hey, consumer confidence is high, so we can absorb that. They can deal with inflation because they have some tax cuts, so people have extra money. So we can do. Everybody has that assumption that everything's fine. So I am a little more cautious right now, and I definitely would encourage anybody who's listening to this show, be as cautious as possible when it comes to your investments or where it comes to where you allocate money or however your financial situation is. I would urge caution right now in this time because it is an uncertain moment where you do have actual real changes, positive changes in my opinion, where you're rolling back regulations, but everybody just feels a little too good about the next year. And that usually is a concern because usually when everybody feels super, super great and super, super optimistic, that's when things radically change. The old rule is what everybody feels is the safest is always the most dangerous thing in the investment market.
Sounds about right. And what is it specifically, Daniel? You had mentioned interest rates going to 4%. That there's people tend to think that. How do you see these interest rate rises that are happening right now impacting or not impacting the housing market specifically? Because we're starting to see cracks in that market, and if that market rolls over again, then we're going to have some serious problems. I mean, or once again, am I misreading this? What's going on?
No, I agree with you that housing market, it's plateaued to say the least. In some markets, you're actually already seeing declines.
Yes.
And in an area like Central Texas, where I am, you've got these property taxes that are tied to the value of real estate, and you've got regular middle-class Americans, firefighters, teachers, and all of a sudden their tax bill on a decent home that they might have paid $200,000 for a few years ago, now they're paying $1,000 to $1,200 a month in tax.
Oh,
that doesn't
goodness.
even count their mortgage. So it's ugly. Now the what's happening though in my specific area, because I'm very more knowledgeable about this area than any other area, is that you've got massive migration coming from these coastal states like New York and California.
Yep.
So people come here and they're like, oh, homes are only $350. They're only $400,000. And they're like, it's super cheap. And by the way, if you're listening to this and you're not from California, New York, like $400,000 doesn't even get you a condo in California. So for them, it's cheap and they're coming here. But for the natives, it's hurting them because it's causing those taxes to go up. So I definitely think real estate was a huge driver, and it's going to have definitely a new phase here where it's at a plateaued a peak in how much these prices can just keep going up and up and up. And of course, interest rates will only make the situation worse,
right?
Because you're not only going to have refinances will decline, but purchases, some people will just simply be pushed out of the market with interest rates rising to normalized levels. One area where I'm worried about interest rates rising, because they are, it's inevitable, with the corporations have been taking out on a lot of debt, and now they don't have a 1% adjustable loan. Now they're going to be obligated to pay more, so that's going to come right out of company profits, and also the enormous demand the government has to keep financing all this spending. People have to remember, if the U.S. government is borrowing $1 trillion in a year, that's $1 trillion that is going into a bankrupt institution, the U.S. government.
Yep.
Where it's further financing and spending money on more unsustainable programs. That $1 trillion could go into businesses. That $1 trillion could go into financing some of our Fortune 500 companies by corporate bonds, but none of it is. You know where it's going to go? It's going to go to the government. And
Right.
That's a big problem. That's $1 trillion that is not going to sustainable entities. It's going to the biggest and mother of all unsustainable entities, the U.S. federal government.
Yep. And instead of helping out the pension funds that are imploding left and right, and they're over the next 10 years, we're going to see just an absolute bloodbath in that sector, in my opinion. I mean, I may be wrong, but I don't think so, because numbers don't lie, and the numbers are ugly, and anywhere you look as far as pensions are concerned. I wanted to shift gears a little bit, Daniel. You're working closely with Frank Holmes and the Hive Blockchain project. And if you would, Daniel, just give us an update on what's going on with that.
Well, I was lucky to have a video guy who actually introduced me to Bitcoin back when it was like $1 or $2. I didn't act on it. I ended up being convinced enough after going to a conference in Vegas to profile it at $13. But even then, I didn't buy it. And my wife would tell me, you need to buy it. It's at $50. You need to buy it. It's $100, $200. And I think finally I bought some around $800 and, held on to it. But I always, I didn't fully understand it or comprehend it, especially back in 2012, 2013. And so I was always looking for a publicly traded vehicle so that's something I do understand. So I was like, if I could just find a publicly traded vehicle, and of course the Winklevoss twins, they got shot down on the ETF, which is how I ended up meeting Frank Holmes, who's very, well known in the resource space. He's tied to companies like Silver Wheaton. He's one of the seed investors. He's one of the seed investors for Gold Corp, and he's got some successful ETFs as well. He's just a very well known, loved guy. And he was trying to get a Bitcoin ETF going for U.S. Funds, which is the company he runs, U.S. Global. And he ran into all these regulatory walls. And what he ended up doing was becoming part of this blockchain company called Hive Blockchain. And it was it was basically when they were doing their financing round. And that's when I heard about it because of him. And that's how a lot of people heard about it. And of course, having him come on as chairman totally legitimized it, because you had a good group putting the deal together. You had a good group in Genesis Mining that was going to help them mine cryptocurrency, mainly Ethereum right now, but pretty soon they'll be the largest Bitcoin miner in all of Europe. But when Frank Holmes came on, for me, that was really, okay, now we have a deal that is going to be headed up by the most serious wealth builder I know, somebody who's got more than a few companies, under his belt where he's helped them achieve the $1 billion market cap. So very excited. And right now, as far as an update on Hive, Hive is trading very low because the venture capitalists that put the deal together, rightly so, have an opportunity to sell some of those shares that are coming free. Now, a lot of people might say, oh, they're selling the stock. Well, look, you gotta remember, Hive, the people who put deals together, shells or land acquisitions when it comes to mining companies, sometimes they part ways with their money for 3 to 5 years. So, there's nothing wrong with it. If anything, it's a great opportunity that they're handing to the retail investor, where they can now buy Hive at a very cheap price. I think it's like $1.25 Canadian, so roughly $1 US. And nothing's changed. They're hoarding cryptocurrency, which has been going up. I mean, they started mining Ethereum when it was under $300. So you've got them hoarding the cryptocurrencies. They've got 100 million in cash just sitting there, plus the cryptocurrencies that they've been mining, plus the other facilities. So, in my opinion, and I'm completely biased, I not only have purchased shares, but with another company that I own that runs digital media, I even work with Hive. So totally biased, totally, skin in the game in a good and positive way. But to me, you've got about a month that you can buy Hive at these cheap, depressed prices, and then, I do think it will go up. But of course, I do want to put a little asterisk and say, obviously, if cryptocurrency doesn't implode or do something radical like go down 50% over the next month. But look, if Bitcoin's around 9,000, or let's say it goes up a little bit, I think Hive's going to be, $3-4 stock, maybe by the end of the summer. And that is, again, a short-term prediction. You have to take that with a grain of salt, because, I could be 100% wrong. That is simply a guess, just based on what I believe the company is worth, and a relatively stable cryptocurrency market between now and the end of the summer.
Well, I mean, if it goes from, $1.25 Canadian to $3, that's a very significant move.
Well, and there are price targets that have that with institutions who've done and analysts. But look, it's very difficult. There's going to be some big decisions coming out here from the G20 meeting on crypto. As you know, headlines tend to move these cryptocurrencies. You've got some whales out there that are doing some selling. So, look, bottom line is, I wouldn't, if you're going to buy this for a day trade, don't do it. You should never day trade a penny stock. You're going to lose money. If you want and believe in the story of Hive, that they're going to build a mining company, or one of the largest mining companies in the world for cryptos, and you like Frank Holmes, look, if then stick along for the ride. But like Frank Holmes, he purchased, I believe, $5 million worth at the beginning. And, his exit strategy is taking this to a $10 to $15 billion market cap company. And that's how he makes his money. He's not going to make money by trading it over the next 90 days. So that's the thing. You have to go into these tiny little stocks with the mindset of the CEO and the chairman that, hey, you know what? I'm going to stick around for 2 or 3 years.
Yeah, exactly. And get the big payout. I wanted to shift gears, take a look at gold and silver. How does gold look from your perspective over the next 3 to 5 years? And do you have any targets for gold that would be a signal to you to exchange gold for another asset?
Well, that's a great question on what signal, where would you want to switch it? But as far as gold right now, for the next 3 to 5 years, or where it is right now, I feel great about gold. If you were just a gold buyer since December of 2015, you're honestly scratching your head looking at the rest of us gold bugs going, why are you guys so depressed? Why are you guys so mad? I bought the gold at 1,045, and here I am at 1,300. It went all the way to 1,360, 63. And that was like weeks ago. And, it keeps going higher. It keeps going higher with each interest rate increase. It keeps making higher highs, higher lows. So I think there's a lot of post-traumatic stress, and a lot of people who have just been through hell with the bear market that it had, especially in the mining shares. But if you look at like the GDXJ, you can see there's seller exhaustion. On a day like today where gold's down over $20, thing barely went down. Most of these mining stocks were just holding up flat because I think there's seller exhaustion. And I think there really is a bull market in gold, especially the yellow metal, where if you're just an investment atheist to this, if gold's manipulated or if gold's money and all this stuff, you're just looking at it. Look at a chart of gold since December 2015. It's one of the best performing assets.
Yes.
In fact, if you go back to 2000, it's still one of the best performing assets. I believe it's still beaten the S&P 500 since the year 2000. So gold, I feel like even if we went down another 20 or $30, it's not really, going out of its support line. It's still technically in a bull market. Silver, I think, is like coiled like a rattlesnake. But I wouldn't buy any of these things on an anticipation of an imminent move. I think it's prudent to own gold. I think it's,
Yes.
look what's going on with our U.S. government. You should own some gold. When it comes to what price I would sell gold at, look, I'd always want to hold some gold because it's financial insurance. But look, if gold had a parabolic move like Bitcoin, of course I would take the opportunity to sell some. And whether I held it as cash or, if I was lucky enough and got to buy that, that company we were talking about earlier, if I got to buy Disney for $50, trades for 10 or 100 today. So, I mean, look, if there was some sort of major stock market crash or housing crash at the same point in time, gold went to say 3,000-4,000, I'd want to take some off the table. But if anything right now, the only thing I would sell gold for personally is I'd sell gold to buy silver. Just because silver historically is at a very, very low level relative to gold. And both gold and silver are in bull markets. So, but I'm not selling either one. I regularly purchase gold and silver, but it's as a percentage of my income. About 10% goes into the precious metals. Another 10% goes into cash vehicles that have high yielding investments like cash value life insurance. But I'm just very disciplined with that, and I look at the gold as an insurance vehicle and private money.
It is definitely private money, and I think that the trading gold for something like real estate would be a prudent use for bringing gold back into the market. But otherwise, I'm right there with you, Daniel, as far as holding on to it. It's insurance, and I'm keeping as much of it as I can. But I personally have different signals that I'm looking at and will be trading some gold in the future hopefully for some property, and silver as well. And speaking of silver, I mean, it's similar to gold, but it has some slightly different attributes. I mean, do you have any targets for silver, or what do you see for the silver market going forward?
Silver is a clean energy metal, and our mutual friend Keith Neumeyer's brought this up to everybody. For everybody who's bullish on cobalt and lithium and copper for this clean energy technology and clean energy batteries that are coming out and the market's demanding
Yep.
it's also silver. So you're just having even more demand for silver. You have had, I think, 3 years of consecutive deficits, and we're not seeing the production go up. If anything, you're seeing a lot of companies cut back on their production. And there's only about 20 silver mines in the world. The rest of the silver comes from copper mines and gold mines. And I think the opportunity for silver is really good. But I do like what you just said, I consider selling the gold for real estate. And apples to apples comparisons, gold is money. So gold versus the dollar, gold versus silver. But, Buffett just the other day in his meeting was talking about Bitcoin and gold. And I think it's so unfair to bring up gold versus the stocks, because the stocks are yielding their assets, their businesses. They have the potential to grow. It's not fair. I'll give you the perfect example. Actually, Buffett said $10,000 in 1964 turned into $51 million if you bought Berkshire or with these high quality stocks. If you put the 10,000 in gold, it turned into 400,000. And I said, you know what? The better analogy is 10,000 in dollars is 10,000 today, and it has way less purchasing value than it did in 1964. Today, it's got, you couldn't buy that much with $10,000. Well, you could have bought a house in 1964.
Exactly.
But with that gold at 400,000. So I like that comparison. But look, in the end, when it comes down to it, think about a VHS sleeve that you used to stick the tapes in. About that size of gold is about 100 ounces. And that 100 ounces today is about $130,000. So would you rather have $130,000 yielding property in the South, or would you rather have this little sleeve of gold? Well, if you can get a 12-15% return on your money, of course, I'd rather have the house. But again, we have to keep it in context. It's not fair to pit gold against assets that are meant to be businesses. Gold is
Right.
not a business. Gold is gold. Its value is that it is gold, that it is money. It is it's on its own. So I love selling gold to buy a producing asset, but I just want to make sure it's not because I don't love gold anymore or think gold. I don't think the stock market's better than gold. I think they're in different universes and they have completely different purposes.
Exactly. And I love that you just the explanation that you just gave, because comparing gold to the stock market is not fair, because they're two completely different things. It's like comparing a giraffe to an elephant. They don't compare. They don't have the same attributes at all, and they don't function in the same way. They aren't designed to do what the other one is designed to do, period. And the only thing that you could really compare gold to would be to silver. And what are those two monies? What are they doing? What in relation one to the other? And wow, thank you for that, Daniel. That's worth the trip right there. One last question, then I'll let you get back to your afternoon. And it's about Trump. And we brought the election up just a moment ago. And what grade would you issue for Trump's performance thus far? I mean, and why would you issue that grade?
Well, I would give him a B, but I think in what he's trying to do and what he's accomplished, I give him an A plus. But I just hate that he gets involved in these petty things on Twitter and I think sometimes it's like Trump has paved the way to becoming a great president, and he'll go down in history as a great president, and then he screws it up by getting involved in some immature argument with a reporter or something like that. So that's the only reason I give him a B. I actually really like Trump a lot, and I was actually supposed to meet with him on Monday.
Wow.
There was a donors meeting in Dallas that got moved, and so I'm not going to get to hit. I think they moved to the 31st, but I'll be traveling, so I won't. I was hoping to actually meet the president, but another time. But when it comes to cutting regulation, A plus, tax cuts, A plus, spending, an F, and he knows it.
Yes.
He was disgusted with himself, I think, for what he had to do. But I think Trump knows that in order to be negotiating from a position of strength, he's got to get his poll numbers up, and he's got to have the economy moving along. And he knew that the only way to do that is to not implode the damn thing with spending cuts early on. But I think he's ready for it now, and I think he's going to tie it all to the wall as well. So I think now that he feels good and now that things are moving along, I think he'll be able to make some of those harder decisions more freely. I mean, he's got decent poll numbers, and he's also got very good economic numbers. So I think now Trump, on this next budget in September, I think you're probably going to see a pretty big fight because he's definitely going to want some spending cuts and the wall. And, and the only other thing I would say on foreign policy, A plus for Korea, if that goes through, my goodness. They tried the same thing for 6 decades and it didn't work. And he tried something different and it seemed to work in less than a year and a half. But I give him an F on the Middle East. He campaigned on getting the hell out of there. Now let's get the hell out of there.
Exactly. We've had enough. We've had enough of the Middle East. We've had enough of North Africa. Let's just get out completely and shut down all the operations. Let's get out of Afghanistan. Let's just get out. Let's bring everybody home, put them on the southern border, put them on the northern border, protect our borders. That's what they're supposed to do. I mean, it's incredible.
No one ever brings it up, but it would be an enormous stimulus to our economy to bring our troops home. Because those 30,000 troops in North or South Korea right now are spending their paychecks in Korea. They could be spending them in Dallas and Austin and San Antonio and San Diego and Florida and Virginia. Those checks could be being spent in our own economy. and those troops could be used to protect our own country.
Exactly.
But they're everywhere.
Exactly, and they would be in a much more friendly environment. I mean, I have to think that Dallas is a little more friendly than Damascus. May be wrong,
Sure.
but just seems like. But anyway, well, Daniel, this has been awesome. I really appreciate all your time, and I sure hope that it's not as long a time in between our next conversation as our last one, because this has been really, really awesome, and I really appreciate all your time today.
Thanks, Rory. And yeah, love the conversation. Look forward to talking to you again. And as soon as it's up, I look forward to sending this to everybody at Future Money Trends.
Well, all right. Thank you so much, and have a great afternoon.
Have a good one, Rory.